So today we have a very interesting note coming in from Credit Suisse, which is focusing mainly on how the Indonesian FMCG market is actually seeing a derating. Now, yes, we have spoken about how the Indian stocks, Indian FMCG stocks are also quite richly valuated as of now. But will that sustain? Will those concerns which we're seeing in the Indonesian market come over the Indian market? So first, let me take you all through what they have to say on the Indonesian market. Now, Indonesian staple valuation, which over the past years has been quite similar to that what we were seeing of the Indian market. But now that has been sharply derated. When you look at it overall, Unilever Indonesia, that is traded at around 25% of a premium to Hindustan Unilever over 2011 to 2016. Now, that has moved to a 66% discount. So, compared to what we were seeing previously at a 25% premium to Hindustan Unilever, now it is Unilever Indonesia is trading at a discount, 66% discount of that. So that surely raises concerns for investors of whether we'll be seeing such a similar thing coming in the Indian market. The risk to the rich valuations that we're seeing for the Indian staple companies. Now, obviously, there are a lot of combinations of technical as well as fundamental factors which are affecting the overall derating in the Indonesian staples. Some of them, the fundamental factors are like the slowdown that we're seeing coming in the Indonesian FMCG market, industry growth, the market share losses also over there by the companies such as Unilever Indonesia is surely showing signs of slowdown, market share losses. Other than that, the pressures on the margins, surely that is all weighing on the thing. So a drop in the index weight of the leading staple companies and the expectation of new listings in the consumer space are some of the technical factors that are impacting the overall derating of the Indonesian market. But Indian staples as of now, there's no concern. They do not share such challenges at present. Most of the companies are expected to grow at around 10% during FY20 to FY24 compared to what Indonesian market is expecting is a mid-single digit growth. So the projection of India is still in the early double digits, while that is a mid-single digit growth. So Indian markets index are already quite free float weighted and has a large number of FMCG consumer stocks as well. So at present, Indian market is not sharing the similar challenges that we saw in the Indonesian market, and overall the derating in Indonesian staple shows the importance and the threshold of the revenue growth. So the revenue growth is a double digit is there to sustain those rich valuations, then they could sustain. But in Indonesia now, that expectation is to a mid-single digit. So that is why what our valuations in Indian markets is we are sustaining that double-digit growth. Credit Suisse is also quite positive. They're confident of that growth coming in for companies like GCPL, Marico, Dabur, Tata Consumers, which have multiple drivers, bottom-up drivers, which could sustain this double-digit growth. So as of now, we do not have to worry about the concerns is what they're saying, because the threshold, the limit of revenue growth is still double digit, while in Indonesia is single digit. And that is what is a main highlight point coming in from the note on the consumer staples, Indian consumer staples, Indonesian FMCG derating happening. As of now, not much concern for the Indian markets.